Let's welcome in now Ed Yardeni. He's the president of Yardeni Research, with me once again at Post 9. It's good to see you.
My pleasure.
On that issue, you say we're not seeing a bubble, but rather a bubble in bubble fears.
Well, right now we got a bubble in bubble fears, but there are clearly elements of a bubble, of a real bubble. I mean, the forward PE of the S&P 500 is about 23 right now, and back during the tech bubble of the late 1990s, early 2000s, we got to 25. The Buffett ratio is at an all-time record high. So valuation is definitely high, but we've also had some really remarkably strong earnings. And I think that that's what's going to continue to drive the market and maybe keep valuations up here. I think the market's discounting a very resilient economy.
Does a possible bubble not even matter right now because earnings are good? People are just going to play the hand they're dealt for now, worry about everything else later?
I think you focus on the fundamentals of companies, and most of the fundamentals are hanging in there remarkably well. Profit margins have been remarkably high in the face of tariffs, for example. Corporate managements have really done an astounding job of kind of dealing with Washington. People look at the headlines and worry about how Washington is impacting the economy. I look at the other way. Look how well we're doing despite Washington.
I want you to listen to what Paul Tudor Jones said this morning on Squawk Box,
Yep.
trying to, assess for himself whether history is repeating itself or rhyming or whatever it's doing about 99 and the tech bubble. Listen.
Feels exactly like 1999. I don't know whether we'll actually replay it exactly, but I think all the ingredients are in place. And certainly from a trading standpoint, you have to position yourself like it's October 99. I don't see why you would do anything but that. And remember, the NASDAQ doubled between the first week of October 99 and March of 2000. So if it looks like a duck and quacks like a duck, it's probably not a chicken, right?
All right, that's PTJ. In other words, I mean, he's saying it explicitly.
Yeah.
You still have to position like we're going to have this massive move in the market. Is that how you feel?
Yeah, I feel as though we already had sort of a look at what this could be, and that was at the beginning of the year. Remember, the stock market was back then around 22 forward PE, and then DeepSeek came out of nowhere in January, and all of the AI stocks got whacked. But then the companies reported that they were going to continue to spend money and that everything was just fine, and the market made a V-shaped recovery. So, if we have a correction, it'll be a buying opportunity just the way it was at the beginning of the year.
But I mean, the amount of money that these companies are spending is so ginormous now relative to what was announced even back when you're talking about, you have conversation about so-called circular deals.
Yeah.
I thought it was interesting. Stacy Rasgon, right? He's a star analyst, top chip name on Wall Street, said of Sam Altman, and he's looking at the deal today with AMD, says Sam Altman has the ability, I think, to either crash the global economy for a decade or take us to the promised land. We're not sure of which. What do you make of that?
Well, I think sometimes Sam Altman gets a little bit hyper about where this is all going. He's described his latest version of ChatGPT as like having a PhD professor working for you, and it's not quite that good. I mean, AI also stands for stands for the fact that it's artificial, but it's not intelligent. It's a probabilistic model, and I think it's very, very good at some routine tasks, and it's already being used, I think, to increase productivity. But look, I use it all the time as a research assistant, but I don't trust it. I always wind up checking it because it makes mistakes.
But I mean, are we in an either-or world when it comes to all this? It's either going to crash the global economy for a decade, all of this money that's going to be going towards nothing, like was promised, or we're going to, in fact, get to the promised land.
Well, look, as I said, I find myself using AI as a research assistant, and so in the past I used Google search and just picked up articles. Now I'm kind of integrating that into my business, and so I think that's obviously creating more demand for the cloud, which
I know,
creates
but that
more
doesn't justify your anecdotal evidence doesn't justify billions and billions and billions of dollars.
I don't think I'm the only one doing it. I think everybody is assessing to the extent to which AI can be helpful in their business. I am, and everybody else is. And I think that at the end of the day, we'll find that it's very good in some applications, and you can't really trust it in others. but then we may also make quite a bit of progress in the technology. So it's not going to be exactly like 1999, and I don't think it necessarily is like 2000 and 2001 when the dot-com bubble blew up, and a lot of those were seller financed. You're right. There's a lot of circularity in the relationships here, but it's real money. I mean, these companies have the cash flow, and they're well managed. They're not making these investments willy-nilly. I mean, they're clearly.
But they're making bets. They're making bets like the rest of us are doing as well. They're just doing it on a grander scale.
I think what they have is they have a tremendous insight into the capacity of their infrastructure, and if they see that their infrastructure is continuing to meet more and more demand, then they are going to be right in expanding.